All right, let's get our magnifying glasses out. Today, we're cracking the case of India's biggest tax reform, the goods and services tax. You know it as GST. So what was the real motive behind this massive overhaul? And more importantly, who were the actual winners and losers? Let's dig in.
We're about to go deep into the data, look at all the evidence, and really piece together the story behind a policy that, let's be honest, affects every single one of us in India. This isn't just about taxes, you see. It's about the very DNA of a modern economy, and we're here to trace it right back to its origins.
So, this brings us to our central question, the big mystery we need to solve. Was GST a masterstroke of economic engineering that finally unified a really fragmented nation? Or was it a complicated mess that might have created more problems than it actually solved? Well, the evidence is in. Let's start the analysis.
Okay, first things first. Every good investigation has to start at the beginning. If we want to understand the solution, we have to examine the crime scene. And believe me, before 2017, India's tax system was, well, it was a chaotic mess of overlapping rules and just total confusion. Just look at the lineup of suspects here. You had the central government with its own set of taxes, and then every state had their own taxes. It really felt like they never talked to each other. So if you were a business trying to operate across India, you had to deal with this bewildering array of laws. It turned simple commerce into an absolute logistical nightmare.
But the real villain of this story, the main culprit, was something called the cascading effect. I want you to imagine paying tax on a price that already has a tax baked into it. It's literally a tax on tax. And because of this flaw, at every single step of the supply chain, the final price for you, the consumer, was getting artificially inflated. So this wasn't just complicated, it was making everything more expensive.
So you can see why this whole crime scene needed to be cleaned up. A new code of conduct was needed, and that code was GST. It was designed with this one grand vision: one nation, one market, one tax. But you know, cracking this code was not easy. It was a 17-year journey, a real odyssey that spanned multiple governments. It even required a constitutional amendment. That just shows you what an immense political challenge it was to get every single state on the same page. This was definitely a marathon, not a sprint.
So how does this new code actually work? Well, in principle, it's surprisingly simple. For a sale happening inside one state, the tax gets split between the center, that's CGST, and the state, which is SGST. Now, for a sale between states, there's just one single tax, IGST. And here's the master key, the really clever part. The IGST system makes sure that the tax money goes to the state where the product is actually consumed, not where it was made. This is what truly broke down those old borders and created one single Indian market.
And now for the main event, analyzing the fingerprints, the impact. To do this, we're going to look at a proposed GST 2.0 overhaul. By examining these potential changes, we can see the clearest signs of where the policy is headed. So, let's look at the evidence.
First piece of evidence on the table, a proposed 10 percentage point cut on small cars and motorcycles. We're talking about a drop from that high 28% slab all the way down to 18%. That's like a direct shot of adrenaline for the auto sector.
Next up, the things you use every day. Under this proposal, stuff like shampoo, toothpaste, and soap would see a staggering 13 percentage point drop. They'd move from 18% all the way down to the 5% slab. Now that's a change you'd actually feel every single morning. And here's maybe the most dramatic piece of evidence, a proposed 18 percentage point drop for individual health and life insurance. The tax here isn't just cut, it's totally eliminated, brought down to zero. That's not just a tax change. That's a major signal about social welfare. Okay, let's lay all the evidence out on the table. This is our Exhibit A. It compares the old rates to the proposed new ones. Small cars, down 10 points. Daily use items like shampoo, down 13 points. Cement, which is critical for construction, also down 10 points. And of course, insurance, with that huge 18-point drop to absolutely nothing. I mean, the numbers really do speak for themselves. So, who are the clear winners in this scenario? Well, the mass market auto industry, for sure. The cement sector, which means lower costs for construction. The insurance sector gets a huge boost in affordability. And let's not forget consumer durables. Things like your TVs, fridges, and ACs also get a 10-point tax cut. This is basically a direct stimulus aimed squarely at middle-class consumption. But hold on, this case isn't completely closed.
Like any major investigation, the GST story still has some open leads, some lingering questions that we still need to solve.
So here are the top unsolved mysteries. First, why are petrol and alcohol still outside of GST? This kind of breaks the whole system's logic. Then, how do we rebuild trust between the center and the states over sharing revenue? That's a massive political question. What about easing the compliance burden for small businesses? And finally, how do we fix this inverted duty structure, a weird flaw where businesses sometimes pay more tax on their raw materials than they collect on their final product, which just traps their money? These are the crucial leads investigators are still following.
So, the GST code has been cracked, and it's been simplified. But this leads us to our final and most crucial question. Can this new streamlined system solve the ultimate puzzle? Can it create a truly seamless, efficient, and fair economy for over 1 billion people? Case closed for today, but the investigation continues. If you found this useful, hit that like button, share this with your fellow sleuths, and subscribe so you don't miss our next case file. Dismissed.